I've been hearing about the market crash for years too, and it's never happened at my side either. No, I do not believe we are heading for a market crash. I would ask you, first of all, what would a market crash look like in your eyes?
Dan Knott, thank you so much for coming on. For those unfamiliar, tell us a little bit about what you do.
Yeah, so my name is Dan Knott. I'm a mortgage advisor who specialises in helping first-time buyers across the UK to take those first steps onto the property ladder and, achieve home ownership.
I want to kick off with the big elephant in the room, which is London. London is where I currently live. London is where I'm currently looking to escape from, mainly because of property prices and just the reality of sort of living in London and what you get for your money. I was looking at some headlines before this. You had one that said central London property prices have crashed and nobody wants to talk about it, warns buying agents. So good news. Then the second one I read was how London property became unaffordable for everyone and what happens next. So I get this mixed message about London. It's like no one can afford to live here, so it's all going to crash in, and then it'll all be affordable again. And then other people say no, it's just not going to happen because you've got the overseas buyers. What is your understanding of the situation in London?
Okay. So buying a home in London is extremely difficult. Reason being, houses are extremely expensive. Okay. The average house price in London is around about 14 times the average income in the UK. That means achieving mortgages and saving deposits is, it's a big hill to climb.
Here's the thing. Someone that changed my mind on, so I've lived in London 15 years. So just assume, well, this is just my home. This is where I'll live. But as I'm getting older and 3 kids in, you're kind of thinking like, do you want the expense? Then do you know who ruined home ownership for me in the UK? And I've got him coming on is Rory Sutherland. What specifically ruined home ownership dream in London for me? He was on a podcast. He said something like, you've got to think in London to buy a house, you're looking at the best part of £1 million. That means you've got to be in the top percentage of earners in the country. It also means you've then got to indebt yourself for like 30 years to pay that off. And then you've got to do that for a property that in the 1950s, the man living there thought, this'll have to do. I've got 3 kids. My wife doesn't work and I'm a milkman. It's like that's insane. If I'm going to spend £1 million on a house, I want a jacuzzi, I want a walk-in wardrobe, I need a home office, possibly a swimming pool. And so maybe my expectations of what £1 million is too high, but I feel like if I'm going to spend £1 million, I want more than like a mouse-infested, mold-ridden house in London that's been there for a couple of 100 years.
Exactly, yeah. And a lot of my home buyers who are buying in London, who are successful people with high-paying jobs, business owners, etc. The first properties that they're buying are typically 1 or 2 bedroom flats, which are fine and they are nice properties. But I know from working with the home buyers that they're maybe not the sort of properties that they actually would like to be buying. Relocation is a big topic at the moment. People are having more than ever, especially when based in London, to think about relocating outside of London or even to other parts of the countries. Now, if you are especially somebody who's born and bred in London, it's incredibly disappointing that if you want to buy a home and lay roots, that you might not be able to do it where your family are based. That's a conversation that I'm having more than ever at the moment.
Well, from these conversations, where would you say is the best place in the UK to buy a house? Thinking a little bit about some of the people you're talking about there, are younger, maybe thinking about having a family too. There's a lot in the media around New York and LA in America being over, and actually more people are going to Austin, Texas, and it's becoming this booming hub because you've got all of these outcasts who didn't want to do the kind of LA thing or the New York thing, and they've all gone there. They've made a little hub. Are there any places like that springing up in the UK where actually the home ownership is a little bit cheaper, but actually a lot of people have congregated together, so there's enough happening that it's not, oh, we left London and now we're bored?
So I wouldn't say there's any specific places. However, a lot of people who are based in London are certainly looking to move to the outskirts, and especially with the rise in the ability to work from home. A lot of people are taking the opportunity maybe to move further north. I'm based in the northeast. House prices here are far different to where they are in London. Now, maybe opportunity in terms of employment might also be. However, yeah, I am finding more home buyers potentially moving further north, especially if they've got the luxury and the option of working from home and not having to worry about being in office in London and in the big city.
Yeah, I think it's one of those things. The whole work from home thing came at just the right time where people like me are actually able to debate, actually, could I move out of London and just commute in 1 or 2 days a week? So then you've got the London wage, but actually you're living somewhere a lot cheaper. And especially when you've got 3 kids like I have, it's like you're just going to give them a better quality of life. Even though some people would say, well, if you're in the city of London, that how could they want anything more? But you don't have the money to use London to its full potential, I think, sometimes.
Yeah, and the average age of a first-time buyer these days is around about 33. Now, your average 33-year-old may either have a family or be thinking of starting a family, and if that is the case, you likely want to buy at least a 2-bedroom house, hopefully a 3-bedroom house, maybe a 4-bedroom house. To do that in certain areas of London, it's easily, as a minimum, upwards of well over £500,000. And that then prevents you from having access to tools such as the lifetime ISA, which has a limit of £450,000. And yeah, there's a real issue there with parts not quite joining together for people.
Well, let's move on to your main area then. And a simple question. Yeah. Is it possible for young people to get on the property ladder?
It absolutely is. It's a difficult time and it takes more planning than ever before, but you can do it. I receive comments on Instagram and TikTok all of the time from people stating it's just not possible. We can't save a deposit. It's not possible for people to access a mortgage because houses are just too expensive. But the reality is that if people weren't buying homes, I wouldn't have a job. So I can assure you that people are achieving home ownership and it can be done. But preparation, and that preparation starting maybe earlier than would have been necessary 20 years ago, is absolutely key.
So if someone wants to prepare, if someone is thinking about buying a house, like what should they do? What on earth is a lifetime ISA and all this stuff? And how in a cost of living crisis when you're struggling to make ends meet, can you actually get enough for a deposit? And what even is a deposit these days? Have you still got to do sort of the 10% or explain it to me, break it down?
So there's 3 major steps to start with. Okay. Speaking to a mortgage advisor early, saving a deposit, and looking after your credit history. They are the first 3 steps on the way to home ownership. So I'll go through them each individually. Speaking to a mortgage advisor. It's never too early to have a conversation with a mortgage advisor, even if you're 5 years away. Understand roughly with your current circumstances, so your income, your debt, etc. Where would that leave you? What sort of property could you buy at the moment if you wanted to? And if you can't achieve your goal at the moment, what do you need to do to achieve that goal over the next few years? Whether that's increasing income, decreasing debt, repairing your credit history, etc. So have that early conversation, get some clarity, some confidence, and that will allow you to then begin moving forward towards home ownership. Secondly, you are going to need a deposit. Most mortgage lenders on the market require a minimum of a 5% deposit. So that would be 5% of the property value. Now, even if you're in certain areas of London, even that 5% can be quite expensive. Okay. I always advise saving as much of a deposit as you can. Reason being, that's going to give you flexibility when the time comes. We have tools available for first-time buyers, such as the Lifetime ISA, which is an amazing tool. Okay. The Lifetime ISA allows you to contribute £4,000 per year, and the government will give you a 25% bonus on top of that. That's potentially £1,000 per year, more if you're buying in a couple. Now, that is fantastic. However,
is there not a limit on that? As in, like, if you buy a house that's too expensive, you can't use it or something? Like, we had Georgie Frost on recently,
yes,
and she was saying she almost got caught out with that, where she was doing it, but then the house she wanted was too expensive, and then it messed her over.
Exactly, yes. So there's 2 limitations that we need to consider. First of all, it's that you can only buy a home 12 months after you've made your first contribution into that account. So if you're looking to buy a home tomorrow, then opening a Lifetime ISA maybe isn't for you. Okay, so that's the first consideration. Secondly, it's that the upper purchase price limit is currently at £450,000. So you cannot benefit from a Lifetime ISA if you're buying a property which is more expensive than that. Now, as we've discussed already,
that's everyone in London out then.
a lot of the people in London will therefore be out. And the problem with the lifetime ISA is that this product opened up around about 7 or 8 years ago. Okay. And the purchase price was 450,000 when it opened. Okay. That has not changed since. In reality, house prices have soared since then. Okay. And the lifetime ISA as a product hasn't been amended to reflect that. So a lot of people have maybe been saving into a lifetime ISA for 5, 6, 7 years, hoping to buy a property that was maybe worth 350, 400,000 pounds at the time. Those properties potentially in certain areas are going to be over that upper price limit. Therefore, the lifetime ISA is no longer suitable. Okay. So that is absolutely a major consideration before you start using one. Okay. However, if it is going to be suitable, then it is a fantastic tool. And thirdly, history and credit scoring. In my opinion, this is the topic of which has the most misinformation online within finance. My experience, and I look at credit reports every day of young home buyers, I would say around about 50% of my home buyers have some form of adverse credit. That could be an arrear, default, DCJ, something worse. Okay. I would say around about 50% have some form of adverse credit. Of those that do, around about 50% of those don't really understand what adverse credit they've got. Maybe they don't know how many missed payments they've got, when they occurred. Have they satisfied that yet? A lot of people don't really understand their own credit history. And this could be a major issue when you're looking to buy a home and you've got to pass credit scoring. In my experience too, a lot of this bad credit is simply a result of a lack of care or a lack of awareness. Now, there are people who have bad credit history due to, bad financial relationships, financial abuse from partners, job loss, etc. So I'm not speaking about those people. But a lot of the time, it is bad habits and a lack of awareness.
Those are 3 really solid tips. Just taking you back to the first one on that.
Mhm.
How do you find a good mortgage advisor? Like, obviously now I know you, so if I ever go to find a house, I'll just email you. However, do I need you said you're in the Northeast, so do you need a mortgage advisor where you live, or can you just do it remotely and it doesn't really matter where they are? And how much should a mortgage advisor be charging you?
Okay, so the landscape has changed a lot in the last 5 years or so. I would say when I bought my first home, which was only 2018, okay, any time before that, I feel like the mortgage advisor that people were using would have just been somebody who maybe their mum knew, or whoever their friend used, or the bloke from down the pub who does mortgages. In recent years, that has changed. A lot of mortgage advisors are online now. That does give you the opportunity to follow mortgage advisors if you're thinking about buying a home, see what sort of clients they work with. Do you like them? Can you relate to them? Do you trust them? And that allows you to then choose your own mortgage advisor. Okay. So those points that I've just mentioned, you should be choosing somebody who you like, who you're happy to talk about your finances with. Okay. This relationship could last the next 25 years. So maybe choose somebody who you're happy to talk to, somebody who you trust. Can you relate to them? So can they relate to you? Can they relate to a young first-time buyer who's maybe a little bit clueless? And the fact that you're going to have a lot of questions. And yeah, you can also get feedback from friends, family, search online reviews, ask them questions. Have you helped anybody like me before? But yeah, it's a better time than ever for choosing a mortgage advisor because you can see more information online than ever. Okay.
And what are the
Sorry.
payment and what is the payment structure like? Do you pay a mortgage advisor by the hour? Is there just a one-off, you're doing this project for me and you pay them for the project? How does the billing work?
Okay, so it really is different for every mortgage advisor, but I'll explain why. Okay. I would say in the UK, for a residential mortgage, typically mortgage advice fees are going to vary anywhere from £0 to £1,000. Okay. Not only does the price vary, but when the cost is payable also changes from advisor to advisor. Some advisors may charge up front, on decision in principle, when you get your mortgage offer, or some on completion. Some even charge at multiple points within the process. Okay. When you speak to a mortgage advisor, that should be an early question. Understand what the cost is going to be and also when it's going to be payable. Okay. And you may be thinking, well, should we not all just go for the free advisor? It's different business models, essentially. I've got nothing against free mortgage advisors. I do charge a fee for my mortgage advice. The reason I charge a fee is simply that allows me to work with less home buyers. And if I work with less home buyers, that means I have more time to spend working with you, enhancing your experience, providing better communication, and essentially making sure you have the best time possible when buying your first home.
Makes sense. I've got to ask you, just because I'm nosy. Have you ever seen the mortgage process split up couples? Like you were talking there about bad debt. Have you ever seen like a young couple that are, thinking about getting married and it turns out one of them is the massive liability when it comes to debt? Like how do couples deal with that situation where one of them is good for a mortgage and the other one is maybe undesirable in that sense?
Okay, so I'll answer this in two parts. So first of all, I've sat on many calls with my home buyers where we're about to talk through their credit history. One of them maybe has quite bad credit or quite a lot of debt. I begin speaking about that and the partner was unaware. And that could sometimes make for a little bit of an awkward conversation at their end. So yes, that does happen. If you are buying a home with your partner, you need to be completely financially transparent because these things will come to light because it's a conversation we need to have and it all impacts your ability to buy a home. But yes, I've sat on many calls where people maybe haven't been entirely transparent with each other about the finances. Now, the second part of that answer is I actually produced an Instagram reel recently, which was about the number one reason a 5-year fixed mortgage becomes unsuitable for home buyers after they have purchased a home. Okay. And it's not due to rate changes. It's not due to a change in their financial goals. It's due to relationship breakups. And I would say it's a common thing, especially with my young home buyers, that maybe after 2 or 3 years, I'll receive an email, Dan, we've split up. We're in a 5-year fix. What do we do? So again, especially when you're young and it's a new relationship, again, that's a consideration that we would have together.
God, awful. Right, moving on just slightly, I wanted to talk to you about the mortgage advisor's role in overextending. So as it goes, it's kind of like, okay, get the deposit you can, then speak to a bank, see how much they'll loan you. Then you've got the loan plus the deposit. Okay, we're looking for houses around that much. Rather than people saying, well, why would I want to go for the absolute maximum? Why would I not come down a little bit so that I'm not completely over-indexing myself on debt? Does a mortgage advisor get a say in that? And why do we go for the absolute maximum we can buy when I go to Tesco's to buy some biscuits, I don't look like what's in my thing and think, okay, what's the most expensive biscuits I can buy? You just got to think, well, I want these biscuits.
Yeah. So it's the first time I've heard it compared to biscuits, but I like it. So mortgage lenders will typically lend up to a maximum of 4.5 times income. Okay, as a loan amount. So that's the first cap that we need to consider. In reality, it comes down with most lenders if you have debt, children, bad credit history, etc. So that's the first thing that hopefully helps to keep a mortgage affordable. Okay, but as a mortgage advisor, what's really important to my home buyers is the monthly payment. Okay, is that affordable? Can they afford to pay that each month? So when I request documents from home buyers, I'll ask for their bank statements. We'll look at what their regular spending looks like. Okay, and essentially see in reality, can you afford this sort of mortgage? Are you going to have to change any of your financial habits? Do we need to buy a different home? So yeah, as part of my advice process, we will always talk budget. We will always talk about spending habits. What do we need to cut out? Do we need to cut anything out at all? Sometimes people are fine and we don't need to make any changes. What I would say is, again, I'm based in the Northeast. The appetite to borrow 4.5 times your income or even higher is a lot lower in the Northeast. Reason being, house prices are a lot lower. Okay. Now, again, to go back to London, reality is that if you are based in London, houses are expensive. And it's with my London home buyers more than anybody else that we have conversations about borrowing 4.5 times income or sometimes even higher. There are mortgage lenders who will lend as high as 6 times income. Now, that comes with risks. And for that reason, you need advice to make sure in reality, is that affordable for you right now? Is that going to be affordable for you in the future? And is that a sensible decision? And sometimes online, reality is that I find it very easy for people to make a post and state, you should never borrow 6 times your income to buy a home. That's a terrible financial decision. However, reality is some people need to buy a home in an area that's relative to their life, whether that's where their family are, that's where the work is, etc. So yeah, things like that. There are risks. Speak to a mortgage advisor, understand those risks, because the last thing you want to do is buy a home, it be unaffordable, and then be a pain in the backside.
That makes sense. Right, moving on. Big question now, because I've been hearing about this for years, and it's happening, and it just doesn't happen. Are we heading for a market crash when it comes to housing? Is it just going to explode? What's happening?
I've been hearing about the market crash for years too, and it's never happened at my side either. No, I do not believe we are heading for a market crash. I would ask you, first of all, what would a market crash look like in your eyes?
In my head, it would bring the prices of properties down. So you would get a lot of people that are losers in that situation where it's like, oh my God, our house used to be worth 300,000. Now it's actually only worth 200,000. But almost not that much sympathy for me, because I'm so tired of a boomer generation that bought their houses for 5-6 pence and a packet of jelly beans. And now it's like, oh, it's worth £1 million. It's like, that's not a good thing. I know that might seem like a good thing to you, but the fact that what you bought your house for, what it's worth now, like, how did you ever expect your children, your grandchildren to be able to afford this? And I don't understand why there isn't a market crash, because we don't have enough housing. We haven't been building enough housing. It's not enough affordable housing. So to me, logically, it should happen. And I wouldn't feel that much sympathy. I know that some people would hate me for that and some people won't.
Yeah, I'm not expecting a market crash. Okay. It's impossible to predict the future, and that would never be my job, but I'm not expecting a market crash. Okay. So I would say to home buyers, if you are waiting for the crash to happen for you to buy a home, probably unrealistic. I would say if you can achieve your goal in the current market, so if you can buy a home that you're happy with on an affordable basis, then it's a good time to buy. Reason being, we simply don't know what's going to happen moving forward. And in terms of aiming for a market crash or working towards one with building more homes, whatever it might be, reality is, in my opinion, that we need to be managing house price growth overall. Now, house prices for certain types of properties in certain areas are going to come down at times. That will happen. But as a nationwide concept, I don't believe we're heading to a market crash, and we need to manage house price growth, because essentially we need to give the next generation a chance. You've mentioned you've got children. I've got 2 children. In my opinion, I've got a 3-year-old and a 1-year-old. I'll correct that. I've got a 4-year-old and a 1-year-old before my partner tells me off. For them to buy a home when they are 30, in my opinion, I think that will be nigh on impossible if I can't give them a deposit.
Yeah.
So I think we are, the government hopefully are looking to manage that price growth to make sure that our children can hopefully buy a home in 30 years' time.
Well, let's come on to that, because, and I know this isn't your area of expertise, but it was put to me that house building is probably the one area of our lives that has not been touched by technology. If you think of 20, 30 years ago, when a phone used to be connected by a cord to a wall, and now our phones literally are streaming films for us. It's our cinema, it's our bank, it's our camera, it's everything. There are definitely places elsewhere in the world that are looking at things like prefab housing, where it's, they're basically printing these houses off, putting them together like Lego or something out of IKEA, and they look pretty sexy. They look like something out of an American movie. They're 2 stories, but they're obviously not made of bricks like most UK houses are. How likely do you think that maybe the technology and what we view a house as might change, and actually people might say, there was the whole Amazon house a few years ago. Do you think that more and more people are going to be exploring options like that, particularly as the technology makes them more affordable, more sexy, more technologically advanced than bricks and mortar house? Do you think that that is a possibility we'll see?
Okay, so the government, big thing on the news over the last year or so is that the government have made a pledge to build 1.5 million new homes before 2029. Okay, now instantly the reaction to that was, is that even possible? Can the builders even achieve that? There's talk at the moment about the builders sort of using the new technology, so 3D printing, etc. But I don't think that's quite where it needs to be yet, and they're still very much working on that. The reason they're looking to introduce this new technology is to essentially cheapen building homes, and also improve the speed of doing so. Um, I think most home buyers, I think in the early days of anything that's new, people are always going to be unsure about it. Are these home reliable? How is this, this build type going to impact things such as saleability in the future? In my opinion, most people want bricks on the walls, tiles on the roof. And they want peace of mind that it's as we've always known it. I think especially as Brits, we like things to be the same. That's why we like to go to the same restaurants, as Brits will go to the same holiday destination every year. I think we're not necessarily fans of change. And yeah, I think most home buyers want a home to look like and feel like as we know it now.
I know obviously you have a bias because of your job, but do you honestly, when you see some of the prices these days, knowing what our parents paid and our grandparents paid if they were just renting, like, do you really think that a house, an average, not even semi-detached house now in London is worth like 600K? Like where we live on our street, there is a flat like we live in. We're in a 3-bed, but the one down the street was a 2-bed. So I saw it go on the market, and I just started to have a little look. They wanted £450,000 for it. And I just thought, I don't think it's worth it. Do you honestly think that these prices are justified, or is it just tough luck? That's just where the market is.
So the buying versus renting debate is bigger than ever. And online at the moment, there's a lot of talk about whether, as you've mentioned, is buying a home the right decision? First of all, what I would say is buying a home to live in is not just a financial decision. Okay, it's not just an investment. It's a roof over your head. It's a garden for the kids to play in. It's a kitchen to drink your coffee. And it's a place to make your own and sort of lay roots. Okay, and build memories. Okay, so first of all, buying a home is not just financial. I think there's a place for buying and renting. Okay, let's talk through a few of the arguments against buying a home. Okay, so the first argument, of which I believe has sort of the most value, is that it's the Simon Squibb argument. Okay, the main one, which is your house deposit could be invested elsewhere, or you could invest that house deposit in a business for yourself. Okay, now can you make potentially greater financial returns investing your house deposit elsewhere? Okay, in a business or in certain stocks and shares, etc. Yes, potentially you could do. Okay. However, as mentioned, buying a home is not just a financial investment. Okay. Homes are expensive, incredibly expensive. But if you're 30 or above, you probably don't want to live at your mum and dad's house forever, and you've got to live somewhere. Okay. And unfortunately, renting a home is also expensive. Okay. It's quite common that I will find that rental payments will be higher to a mortgage payment on an equivalent property. So in terms of monthly payment, it's often similar anyway. Another argument that I hear a lot is that you're buying a home for £450,000, but you're going to be paying double that once you've paid the interest. That is true, and it is a depressing set of figures to look at. However, again, if you are renting, that is essentially 100% interest. And unfortunately, you're not going to stop paying that rent at the end of a term like you would with a mortgage, so it's going to go on much longer. Reality is that there is no ideal scenario either way. There is no perfect solution where we can all have our nice little houses and it only costs a few pence. Okay, it is difficult. And if mobility is a priority for you, or you don't have the deposit funds, or your finances are unstable at the moment, absolutely renting is a potentially suitable option.
One question I want to ask you, especially because I think that it's disgusting that this has even happened, but it is. Are homes still a good investment? You mentioned it there a little bit, like people think of them as investments. I really don't think people should think of them as investments. That's how we got into this mess of how expensive everything is. But if I were to say to you, oh, you know what, I've already got a house, but shall I buy another one just for the investment? And is it the same as it was? Is it getting a bit worse as an investment vehicle? What's that situation looking like?
Okay, so investing in property, yeah, can still be a good investment technique or strategy. I would say, like with any investment though, you need knowledge and you need sort of a plan. A lot of people do think that investing in property is just an easy route to take. You buy a home, you let it out, happy days. Unfortunately, it isn't always that straightforward. Whether that is difficulty finding tenants, bad tenants, there's a lot more to consider there. Okay. Can it be a good route to go down? Absolutely. How worthwhile it is investing in property, depending on the sort of property you're looking to invest in. Again, it is impacted by what sort of area of the country you're looking at. A lot of my London investors are actually investing in the northeast. Reason being, house prices are pretty low. So yes, people can do this. A lot of people are absolutely still investing in property. A lot of people feel that's the reason a lot of the homes are being taken and eaten up by investors and landlords, which is a conversation in itself. But yeah, there is still potential to invest in property, but you need true strategy and knowledge.
Yeah, that makes sense. I still don't think it's right, but it is where we are. We have got a lot of talk at the moment in the UK about the Chancellor and the autumn statement that's coming up. What will you be looking out for as someone that deals with mortgages and people applying for mortgages every day? What should we keep our ears out for?
So I'm not necessarily expecting this to be featured in that statement. However, we've spoken about the lifetime ISA earlier. Moneybox at the moment are campaigning for change with that. Moneybox are aiming to increase that limit. I'm not sure on the exact figure, but maybe up to somewhere around about £650,000. In my opinion, that is one of the most important things that we can do to help young people in this country to buy a home. The Lifetime ISA is a fantastic tool. However, the fact that it hasn't changed in so many years is limiting, and it's meaning a lot of people can't take part.
If you were advising the Chancellor, what else would you say that she should be doing to help first-time buyers?
So, affordable homes. There's lots of different home buying schemes that are there to help young home buyers. The likes of shared ownership. There used to be the Help to Buy scheme, of which they've now got rid of. But there's a different type of scheme, essentially market value discount properties, sometimes called Section 106. Okay. This is actually how I bought my first home, and I'm a big fan of it. What this is essentially houses must be sold at around about a 30% discount of the market value. The benefit there being to a home buyer that you need a smaller deposit and a smaller mortgage to buy that home. The downside of this sort of scheme is that you can only then sell the property at a 30% discount again. Therefore, you're not going to benefit from the full appreciation and value. However, in my opinion, from my experience with myself and also my home buyers, of all of the affordable home ownership schemes, this is my favourite. It's still a relatively new scheme. It's a one that's sort of rolling out in different forms in different areas of the country. It's quite often council-led. Yeah, I think we need to see more of this. I think that's the best way for somebody to access affordable housing as an owner.
The other thing, obviously, in the world of after the Conservative Party conference is this abolishing of stamp duty. Now, I know your main topical area is the first-time buyers, but explain to us how abolishing stamp duty could change the game.
Abolishing stamp duty could change the game because stamp duty can be a huge upfront cost when you're buying a home, especially as a home mover. It can cost you thousands and thousands of pounds in stamp duty when you're buying a home. So sometimes people might be able to access the mortgage, they might have the deposit, they can't afford the stamp duty. Okay, so it's another major hurdle. By removing stamp duty, you're removing a major cost associated with buying a home. Will that help more young people to buy homes? Potentially. However, the consideration then is always, if you remove stamp duty and more people can buy homes, potentially, does that drive house prices even higher? Now, I'm not saying that is the case. We don't know exactly how that will balance itself out over the years, but that is the consideration. As well as that, stamp duty is tax, and the government like to charge us tax. So how likely that is to happen, when it would happen, or in what form it would happen, we simply don't know.
Yeah, it's all speculation at this point, but I find in politics, it doesn't really matter who said what. If one party offers it, then the other parties are pressured into doing the same. So we'll see. I just wanted to, before we wrap up, talk about other countries and their approaches to mortgages and home buying. Because one thing I was surprised to learn, I don't know how true this is, in a lot of other countries, when you take out a mortgage, your rate is fixed for the duration of the mortgage. So you're not at the whims of all of this inflation nonsense, and it's gone up, it's gone down, and like we saw with the mini budget a few years ago, when those, people had to sell their houses because the rates just went up by thousands of pounds a month. Is that true? And would you like to see us move to a system where rates are fixed for the term?
So these sorts of products do exist in the UK. However, there isn't really a huge appetite for them. Reason being, I do believe people like to have a little bit more flexibility in the UK. So if you're only tied in for a 2-year fix, you feel like you've got more flexibility to then exit the deal, either to then move home or to benefit from interest rate drops if that does happen. There are smaller lenders in the UK who have started introducing this. I would say the appetite isn't there at the moment. Most people, from my experience, like to lock in for a certain period, only it may be a shorter period, a 2, 3, or a 5-year fix, and then have the flexibility to exit the deal for one reason or another after that. As an example, there are multiple lenders who offer 10-year fixes in the UK, which isn't quite the length of the entire mortgage, but there's multiple lenders who offer 10-year fixes. But with that, you are then tied in for a 10-year period. And if you were to then exit the deal within that 10-year period, there will be early repayment charges to pay. Now, if you're a young person buying a home, especially in the UK at the moment and the way that the world's changing, it's very difficult to predict your life over the next 10 years. Whether you are going to split with a partner, as we've mentioned, want to move home, need to relocate for work, whatever it might be. So for that reason, there's maybe a lack of appetite for longer fixes in the UK.
Just on that, if I took out a mortgage and then won the lottery or came into some money, can I just pay off the mortgage like that? Or are they kind of like, no, you've got to still stick to the monthly payments? Or can you just be like, well, I don't need this anymore, just pay it all off?
Okay, so you can. Okay.
Right.
Within a fixed term period, there will be early repayment charges. Now, exactly what the terms of that are depend on the mortgage. So it'll look something like this. If you are taking a 5-year fix, you will have a 10% overpayment allowance. That means you can overpay by 10% of your balance per year. Anything you overpay over that amount within the fixed term period comes with a penalty. Typically on a 5-year fix, it'll be something like 5% in the first year, 4% in the second, then 3, then 2, then 1. So can you do it? You can. You may incur some form of early repayment charges in doing so. Once you're out of a fixed term period, let's say you're on a standard variable rate with a lender, you can then overpay as much as you want without penalty. Therefore, you could repay the full mortgage without penalty.
Interesting. Well, let's see if I win the lottery. Just before we move on to our rapid fire questions, I know you don't have a crystal ball, but you are much more in this world than me. So what do you think the next decade looks like when it comes to the property market and being able to afford to buy a home?
My honest answer is that I don't think it's going to get any easier. I think it will continue to get more difficult as the years pass, especially in areas such as London. My hope, though, is that with new homes being built, we are going to be able to manage that to give home buyers a chance over the next 2, 5, and 10 years.
Do you know what I realise I don't remember you giving me a firm answer on? If it was up to you, where would you buy a house? Where in the UK would be a good place to buy a house?
So I'm based in the Northeast. House prices here are cheaper than anywhere else in the country. I live by the sea. I work from home. I'll give you some context. I live in a typical family home, a 3-bed, semi-detached property. There's an extension on the back that was here before I moved in. There's a garage conversion, which is our child's playroom. And we've got a lovely big back garden in a nice area. We bought this house for £200,000.
Wow.
Okay. So the Northeast is a fantastic place to live, in my opinion.
Yep, no, fair. Right, let's finish off with some rapid fire questions. So, best piece of money advice you've ever been given?
Don't mess it up early. Don't take on too much debt. Don't ruin your credit history early by being young and silly.
One mortgage myth that drives you mad?
That you can't buy a home in the UK.
One financial habit everyone should start today?
Have an awareness of your credit history.
One thing that instantly makes a house feel like a home?
Family. Children being there.
What have you learned from your guests doing your podcasts?
Oh, that's a good question. So I had a fantastic guest on. He's called John Savage. His tagline is the UK's most outspoken estate agent. That episode is actually out this Monday. That will be released by the time this goes out, I imagine. John talks a lot about UK estate agency and what a mess it is. Essentially, there's so much value in that episode. John really is a straight talking estate agent, and there's a lot to learn in relation to how to work with estate agents, how not to fall for any rubbish from estate agents, and how to make sure when you're buying or selling a home, you're getting the best possible result for you.
Perfect. Dan, thank you so much for joining me. If anyone has been listening to this and thinks, I want that guy to sort my mortgage out, where can people find you?
Perfect. So my main social media page is Dan Does Mortgages on Instagram. That's at Dan Does Mortgages _. I have the same taglines on Facebook, TikTok, and it is Dan Knott on LinkedIn. As well as that, I do have a podcast, as you've just mentioned. That podcast is called Let's Buy a Home. The aim of the podcast is to help people to not only buy a house, but also to make it a home. Reason being, I understand, although I'll help with the finances, there's so much more to buying your first home.
Perfect. Thank you so much for joining me.
Thank you very much for having me. It's been great.
Thanks for watching. Don't forget to like and subscribe.